Everyone, this is Ryan Mallory, SharePlanner.com. Do another session of LiveCharts, April 12th, 2013. Market's coming back. We had the huge sell-off this morning. We had some news out of Europe, and you also had some, excuse me, some domestic news reports that didn't really jive well with investors, and then as a result, we had this heavy pullback early on. I was actually surprised it went on as long as it did because of the initial slope of the decline. So. Just looking at the decline on the 5-minute chart here, it just kept picking up steam, and at 11 o'clock we still weren't sure if it had formed a bottom yet. At that point, I had thought that by 10:30 this bottom right here would have marked the lows of the day, but we actually went a little bit further than I expected. But what did not change is the fact that after the morning sell-off, we got this wave of dip buying that came back in. S&P led the way. You got the same thing in the DJ 30 here. You have a push back to break even, and actually we're green for momentarily. And on the Russell, I haven't quite got there yet, and I'm going to get back to the Russell here in a second. And then on the Nasdaq, you have a push back to break even as well. So here's the thing, though. If you look back at the daily charts here, Nasdaq near its highs, Dow at its highs, S&P at its highs. What's bothering me is the Russell. You look at the Russell, and it has not broken the highs from back in March. So that's a significant divergence, and usually your small caps in a market that's trending higher should be leading the way. That's at least my experience with it. And you're clearly not getting that. In fact, let's draw a trend line off of the lows here. You can see here where we broke the trend line back in March decisively. It would have made for a great momentary short for about 4 or 5 days, but now we're retracing, and this could end up being some heavy resistance on the underside of that trend line. So I'm not going to start trading short at all, but this is something that you want to be able to keep a lookout for, because with the S&P trending higher and everything, I still say keep going higher. But if things start getting bad and everything, you sort of have this knowledge in the back pocket. Okay, Russell was starting to forecast this early on, that this market wasn't moving in sync with each other all at once. So the Russell's providing us a little bit of a bearish divergence. I don't think it's any reason to start heavily shorting the market or anything else, but it's definitely something to keep in the back of your mind as the talk about hitting new highs every day keeps hitting a bigger and bigger ranker with the general public. So let's go put some Bollinger Bands on this beast. And you can tell we talked about this yesterday. We get outside a whole candle body outside the upper Bollinger Band. That's usually a not so good sign as it pertains to the market and where it's likely to go in the days ahead. We saw it today with the heavy sell-off, gets us back inside the Bollinger Band. Now we're actually, if we finish much higher, we could have an entire candle body again outside of it, even if we finish down on the day. These Bollinger Bands, they're expanding at about 67 points per day. I don't expect it to get much bigger than that unless there's just this huge secondary push up like what we saw back on Wednesday. Volume, I wouldn't say it's been anything spectacular on this push higher, but I'm not sure what great of a role volume has played in recent years when it comes to monitoring the legitimacy of up moves higher and moves lower. So thank you, Fed, for that. All right, let's look at a couple of short positions that are popping up on the radar. Once again, I'm not taking any of these. I'm not really feeling it from a bearish perspective. However, if you guys have been following me any length of time, you guys know that I do keep a active short list just in case this market decides to head lower. So get rid of these Bollinger Bands. MTB sticks out for me. You got banks reporting next week. You have like a triple top, I guess you could say, maybe even a quadruple top, right? So you have a peak here, almost a peak there, and then an attempt at another peak there. So 4 of them in total, but let's just focus on these 2 peaks and then this third one here, and then the what looks like to be a subsequent breakdown. So if we can push through those April lows, let the stock push lower for a little bit, maybe bounce off that 200-day moving average, and then come back to this neckline, then you could have a really good opportunity to get short on this stock with a pretty advantageous risk reward setup. IM, similar chart pattern with the double top here, and then you got a legitimate breakdown taking place today. Let's just go ahead and draw that. There we go. You can see we broke it at around 1882, and since then we've sold off about 14 cents, but very legitimate. Excuse me. I think you could probably take that with a stop loss if you're comfortable with it, maybe around 1943 or so. One of the stocks that, from a long perspective, that has got my attention, and I haven't taken a position in this yet, but what caught my eye on it is this nice little declining resistance level, and it's challenging it as we speak right now. But I don't want to get long on it if it breaks it, even if it breaks it decisively. That would be probably around 61.75. But the problem is that it, 3 days ago went all the way down to 55. That's a pretty hefty sell. That's like 10%, and it's run 10% as a result in recent days, and you can't use that as a stop loss. So what I want to see is I want to see it break out, maybe consolidate here a little bit, and give me maybe like a 2 or 3% stop loss that I can work with. The couple of commodities that I want to focus on, SLV. This is a very disturbing trend if you're holding large chunks of silver, just from a personal viewpoint that inflation's going to go crazy and assets like silver and gold are going to be the only thing you can barter with. I'm not really a huge believer in that theory. I do believe in the legitimacy of inflation. I'm just not so sure that everybody who's bought silver and gold because the commercials on TV tell you to do so are all of a sudden going to be spared from any problems or hardships that occur. I think there's even a point in U.S. history where the government actually seized the gold possessions. I could be wrong on that, but you just never know. You never know anymore with this world. In any case, you can see it is breaking down through a significant support level. Good chance this thing goes sub 20, man, if it just keeps on tearing, because there is no support in sight for this thing. You could make the case maybe at $20 it has support, but at $19, that's probably where it's headed to. GLD. Same song, second verse. Heavy sell-off. Not doing too hot. So we're not hitting the fresh yearly lows like silver is. This one takes us back to 2011. Silver took us back actually to 2010, but possibly even a more bearish chart than silver, just because of the heavy consolidation at the top here. And the distribution that was taking place at the top, and now the subsequent push lower. IOC. I like this stock. I think you can look at it from two different ways. If it breaks below 51, you got a short for yourself. If it gets back above 78, you got a long for yourself. Now the likelihood is it hits 78 well before it ever hits 51. Very volatile stock, so I would not try to play. So that was on the weekly chart now. But if you look at it on the daily chart, you can take the short at maybe. I'd say you could take a short at like 69, or with this consolidation at around maybe 70, 78 if you want to be exact, probably about 77, 87. But you can see the difference between the weekly charts. Weekly chart shows a little bit of a different picture here, maybe like a bull flaggish type picture, whereas the daily shows a like a double top consolidation, so there's definitely the potential for a long or a short position on both charts. I do like it though if this thing can break that 77.87 level to go ahead and get long on it, because that double top like pattern will be nullified, and it should get a wave of new buying interest as a result. That's going to do it for today. If you guys have any questions, feel free to hit me up, Ryan@sharepointer.com, or you can just find me in the Splash Zone. I'm in there all day, every day, and take your questions, answers, and get back to you in the quickest way I can. So y'all have a great weekend. Spend some time with family. Get outside, get away from the computers, and God bless you all.